something at 1:30 for AUD, and GBP had something at 7 o'clock, right? So you can see that those two news releases are currently behind us. So we can look further into the day, and what we are seeing is that we don't have any, okay, we have red folder news towards 6 p.m. for the Canadian dollar. So you see when things is red, it shows that it's a high impact news. Is that okay? And then we have some orange impact news around 1:30 and 2 p.m. But this is the one that we really, we really pay most attention to. So at 6:30 p.m., CAD is going to experience um, some some effects from the fundamentals. So you just be on the lookout at that time. And then of course, sometimes the orange folder news like this can have some momentum being kicked in into the markets from the orange folder news, but it's not as strong as what we get from the red folder news. So, usually we don't really care about the yellow, we just care about the red, and then sometimes we look at the orange folder news. Okay. So that's that for fundamentals. So we don't need to know what they are saying. You don't think I start reading all the newspapers. We just want to know, okay, how much can this news affect us and affect our trading for that day. Okay. So let's see one or two things, and then I'll just do some USD pairs, think USD, Euro USD and GU. Then I'll invite Mr. Jerry to look at gold with us. Okay. So I'll invite Mr. Jerry to look at gold with us. Okay. The group has been buzzing since morning. Results have been flying from the gold trade. So of course, we'll just look at it together. All right. So EU, let's go to the higher time frame. EU was said yesterday that if we close yesterday with the way, if we get, because last week we closed with a week here. So we said that yesterday that we expect what a daily expansion to the upside. Yesterday it was said that we expect a daily expansion to the upside, and you can see that yesterday closed bullish. You can see yesterday closed bullish, and it was able to clear the previous high. See, can you see on the line chart? It said that we took the previous high, so that means we have expanded to the upside. So it's not out of place for us to start looking for buy opportunities on Euro USD. It's not out of place at all. You can see this was a major low on the weekly. That price, you can see this was a major low from the weekly. That price came instead of price to close this place with the body, so that we just look for the most recent pullback, and then we can come in again for sales. But price rather did what? Price came, tried to break it on the weekly time frame, and then close with a week. When something happens like this, when we close a major high or low with a week like this, it means that since we are trying to sell from here, it means that the sellers, when they go here, they were exhausted, and the buyers came into the market at this point in time, pushing the price upward, and then we close with a week. So that shows exhaustion from the people that were selling. Is that okay? And of course, you can see how it always plays out. So when you see this kind of situation on the higher time frame, let's say you see it on the weekly time frame, right? When you go to the daily time frame, what you want to see is you want to see what an alignment, right, on the daily time frame. You want to align with what the weekly told us, and that is what by price breaking structure to the upside. So you can see now that now we are on the daily time frame, and price has given us that break of structure, or call it expansion, or people call it change of character. Anyhow, shall we have broken structure to the upside with the body now. So what are we expecting now for EU? So you see that we have done step one and step two. So step three is to look for entry, right? Now, if I'm to now you recall that we buy from premium prices. Sorry, we buy from discounted prices, and we sell at premium prices. So when you're in such situation, you always want to know where is the cheaper place. Where is the cheaper place to sell? And you see it is down here. This is the cheaper place to sell. And then coincidentally, that place also has what? That place has an imbalance, and there is some sort of key level behavior here. pick up now, okay? There's some sort of key level behavior at that same area. So you see, when EU drops back down into this place, this is a very good place for us to fire EU to the upside. Is that okay? It's a very solid place for us to fire EU to the upside. You say that this is a discounted price. You know, when you finish looking for your major structure sweep, right? Major sweep, structure high or low sweep, you go to look for the what? For the expansion. When you get the expansion, you now go to the time frame lower to look for what? To look for entry. Is that okay? You go to look for entry. So that entry now is what? When you have your entry like this, you check, do I have a fair value gap at that region? If you do, then that is a very good reason that price can drop into that place before flying back upward. Can you see? So that's what we're expecting now for um for EU. EU, and I think GU is sharing the same sentiment. We'll do GU now. And then we have a good area that when price drops into this place, we can look to buy. Let me see what the SL will look like. We are covering the whole low. It would be about, okay, it's about 50 something pips SL. So maybe you can refine it to this line that I drew. Let me see, so I can get a better reward to risk ratio. Okay, this is about 40 something pips. It's still on the big side, but at least it's something. So when EU drops into this place, we are going to be set for buy opportunities. Is that okay? All right. So let's hope that it drops and it doesn't go and take any major high before coming back, because you know that this low now will be in jeopardy. If it takes any major high and sweeps before coming back, you know that this our buy is in trouble. But for now, the buy is very valid. Okay, so that's EU. So I said we'll look at GBP USD, the Great British Pound, against the dollar. Okay. So GU is sharing the same sentiment, but let me show you how GU is showing his own. GU is showing his own via what? Via candle sweep. Can you see that the weekly is currently sweeping, right? You can see that the weekly candle this week is currently sweeping previous week's low on GU. Okay, so we have tendencies to come for this high, is it not? And now when we go to the daily time frame, what do you see? You see that we have also done that expansion on the daily time frame. See the line chart. Can you see the line chart? Can you see that we have also gotten that expansion, that break of structure? So now we have done step one, we have step one, we have step two. So now what's step three? Step three is to look for entry. Abi? So what did I do for entry? You want to what? Since you are buying, you want to buy at a discounted price. If you are selling, you want to sell at a premium price. Is that okay? Now, discounted price simply means you are buying it when it's cheaper. Is that okay? You know, if you are buying something, you want to buy when it's cheaper, and if you are selling, you want to sell when it is more expensive. Is it not? That's exactly how pricing it goes on the chart also. So if I'm to draw my Fibonacci extension from here to here, you see that it shows you that this is the cheaper price, right? Anywhere from the 0 to the 50 is the premium. Anywhere from the 50 to the 100 is the discount. Good. So now what do we want to see? We want to experience a pullback into the cheaper prices so that we can now buy from there. Are we together? Because buying from here is a little bit risky. Sometimes, yes, price will just fly up. But you see, more often times than not, it's safer to buy from the discounted price. So at least you know that you're getting at a better pricing. Now, let me show you something. Can you see that in this discounted price, we also have an alignment with fair value gap? Fair value gap is simply an imbalance in the market. So can you see that we swept here? See that we swept here and then we broke here. Can you see? Then we have what? We have imbalance here. So this is a very nice place that GU can come down to buy from. Now it will even be more high probability if we get something like an inducement. That would be even more reason to buy from here. But for now, this is a good area to explore GBP USD from. Is that okay? So that's a good place to explore GBP USD from. Okay. So let me do GA and then
Well, Tito, let me share my thought on this.
okay.
Yeah. Me, I'm looking at more of a sell on this GU, right? Go back to that weekly. Go back to that weekly first. To that weekly. Fine. Based on the candle theory, we may sweep the low, but last week it still closed bearish. Based on candle form theory also, we base bias on the only way this guy can bullish is when we have a weekly close above that bearish candle that closed last week.
That's this one.
Yes. So overall, for me, the market is bearish. This guy is bearish. When you look at from the swing guy, we are creating a swing low already. That is swing guy, that one swing low. So go back to daily now. Go back to daily. Okay. So on daily, you can see we break the last low. Before this last low is a break of structure. That low, the first low. Yes. If you look at that place that we close with candle. So the buy will have the buy we are looking for has already take off, and I believe that this buy is just a form of pullback. So go to 4 hours now. You now see now you can see a confirmed break of structure from 4 hours now. From the former swing low to this swing low. So our high now is that, put your cursor on that high. That high that break the low. No, not the one. High, yes. That high. So put your Fibonacci from that high to the low. So you can see that now your analysis on the buy is very, very correct. But due to from higher time frame, GU is bearish, right? And when you come to 4 hours, daily we are seeing break of structure. 4 hours now, we have seen the break of structure. So this expansion now, you can see that this is just going. It will make the buying you analyze will be good if he has done a pullback early. Then somebody can join a counter trade to buy it. But where this guy is going now is we're already going to a premium. So for me, it's better to look for a sell opportunity, maybe around 75 to 78. But there needs to be a confirmation. So for me, I will be more looking for, if I see a bearish confirmation from this premium side.
Yeah, that would be a good reason to sell.
Yeah, that would be a brilliant to
sell
sell.
down to this area. Yeah.
Yes. So that's what I'm looking at on GU.
All right. It's good. Thank you.
Okay. Thank you. Thank you, Val. That's good. And Sito, thank you very much. I think let me also add to what Val just said. Sometimes when we are making analysis, we need to pay attention to, like, let me use a car, for example. Before a car will start moving, there has to be some fuel in the car to drive the car. If there are no fuel in the car to drive the car, there's no way, there's no amount of times or ways you start the car that the car will be able to move. So what am I saying? Sometimes when we try to make analysis technically, we need to look at what is happening in the fundamental. The economic data that are coming out are the fuel that drives prices. So, and these fuel are so strong that they can erode anything we are seeing on the technical. Both Sito Bong and Mr. Val are both correct. But where we are now going to, the bias we can take, someone that wants to buy based on Sito Bong's analysis can easily buy and then take caution towards the zone where Valentine talked about. And then someone that wants to sell at that point can also sell. But overall, we need to pay more attention to what is driving price. And that is where some of where the institutional traders have edges over some of us that are retail traders. So the fundamental that is driving price on the dollar, because the dollar is currently the driver here, is due to the peace talk that is currently happening, and also the uncertainties that is ravaging as a result of the tariffs that is put to play by the Trump government. A lot of investors are not seeing a possibility that the peace talk will hold waters. That is where we see gold firing up seriously. So when we see a fundamental that, yes, go to the vote. I'll come back to this GU. When we have a fundamental that is, pumping fuel into the vehicle, into the car, it becomes very paramount for us to pay attention to that fundamental. The peace talks and the tariffs by the Trump government is making a lot of investors not to have confidence on the state of the U.S. economy or to have a sustainable economic growth. So when it happens this way, investors tends to run to the safe haven commodities, and gold happens to be that's one of them. And so because we are having uncertainties, there are fears that will this thing hold, will this thing happen? Investors don't want to lose funds. They want to lose their money. They don't want to lose their investment. So what they do is to look for where should I put my money to hide, where can I hide my money so that my money can be preserved over time. So what is currently happening in the world or globally is coming from what is happening in the US and the fuse and the war among the Israeli Hamas war and also the Russian-Ukrainian war. All these wars, investors are looking at it as something that may likely continue despite the peace talk that Trump is inaugurating with some of these people. And that's why we have investors running into gold. So when we have a strong fundamental like this, what we do is to come to the technical and pay attention to how this is, surfacing on the chart. When there are strong fundamentals like this, most times what we see is that price takes a new turn. Price starts rallying uncontrollably. And that's why we have gold buying uncontrollably. So in circumstances like this, as a trader, what you do is that you adjust your trading style and begin to watch out. I begin to take advantage of that fundamental. So what I do, or what I've learned over time, is that when we have fundamentals like this, what happens basically is that the big dogs, the institutional traders, always want to find a very good place where they can take entries. But before they will take entries, they need the small traders, you and I, they need to deceive us to come into the market for them to be able to take entries. And one of the ways they do this is to trigger a deceptive counter order. Let me say triggering a direction against the main trend. The main trend here is a bull trend or an uptrend. So most times, if you look, those of us that have been following the chart very well, once it is London opening session between 7:30, 8 a.m. and 10 a.m., if you are the type that is trading, you will notice that there's always a drop on the gold chart. They will push price down to up to 200 pips. The reason for that is for them to find entry where they'll be buying cheap to continue the rally. So they will push price to deceive the retail traders that the price is going down so that retail traders can jump in. So as retail traders are jumping in, what happens? They can begin to place their order. They can begin to put their orders in trenches because their orders are big orders. So once we are in a strong rally like this, like in gold, what you do basically as a trader is to find a way to always join that move. Now, how do you join? You join by waiting for them to push price down or for them to spike price down to pick an entry. And that is what I've been doing. So once I watch, sometimes it happens in Asian session too, between 1 a.m. and 3 a.m. They will spike price down for them to create a deceptive move to bring in retail traders so that they can begin to take in their entries. So once they spike price down, what you do as a trader is to look for the nearest consolidation or nearest support where you have price making some attraction. Sitobon, please, can you expand the gold chart? Let's spot one from the lower time frame. Go to 1 hour, let's say, or 4 hours. You can expand it 4 hours. So because what here, good. Come back to the left. No, to the left. Let's go to the left like 2 days ago. Yes, here. Yes, that place. You can see they sparked price down. They don't want to buy, they actually want to buy gold, but they don't want to buy gold at that top where we have by the left, the high by the left, Citibank. Yes, that they don't want to buy gold there. So what they do is to spike price down to create a deceptive move for retail traders to come in. So when they spike price down, what they do basically is they begin to have retail traders entering sell. People will be entering sell. Now, as retail traders are entering sell, they are entering their own buy orders in trenches. They are taking their own buy orders in trenches. So as a trader yourself, what you do at that time, we see that spike. What we just did, there are two things you can do. One of two things you can do. You can look at the last swing or span in the direction of that trend and plot a Fibonacci to see if to spot the 50 or the 61.8 zone. That is more likely the zone where that spike down will terminate, because the institutional traders believe on the biometrics of movement, of price movement. So they will come to terminate, they will want to stop that spike once it has done 50% or 61.8 of the previous swing. So basically, once you can pinpoint 50% or 61.8 of the, please, can you plot your Fibonacci from where you have your trade view, that support, where you have your trade view, bring it down to that. Yeah, bring the low. No, the low, the 100%. Yes. Good. That's where we had it. That's the previous swing. Yes, you can see that this is coinciding to 50% of the Fibonacci. And not only that, there was a formal low by the left that is close to that 50%. No, not that place. Go up. Where? Go. Yes. One. The second one by your right. Second one by your right. Two. You can see. And then the spike that they made. Three. Coinciding with that zone. So when there's a strong fundamental like this, when we see that spike, that's when we need to be very patient. When we see that spike, you have already plotted your Fibonacci to pinpoint 50 and 61.8 zone. Once you can see 50, between 50 and 61.8 zone, at the zone, that's the zone you should pay most attention to. Now that zone becomes very powerful when you see that price coinciding, when it's coinciding with previous lows, like we have just plotted here. And then what I do most times is that once price hits that 50, I take my first trade, my first order. I take my first trade, but my Fibonacci, my stop loss is always at 78.6, because I know they won't go deep to that level. Number one, they won't go deep to that level. Number two, any news, please pay attention to this. Any news that is coming out during a rally like this, if the news is negative to that instrument that is rallying, that news will only provide a correction, a small correction or a correction that the institutional traders would use to rejoin the trend. Please pay attention. Whenever there is a news, most times, 75% of the time, when we have a strong rally, if the news is negative, it's going to provide a corrective phase for traders to take entries in rejoining the main trend. So be it a news, be it a spike like we have like this, these are possibly scenarios that can give us entries to rejoin that move. Do we understand? So this is what we do. Most times I don't really look at much of the technicals when there's a strong fundamental pushing price. And then once you take the trade, just take your trade and relax. As long as your risk management is in place, take your trade and relax. Most times, 80% of the time, when this happens, price will go up and break that high, because the fuel that is being injected in the vehicle is very, very strong. So it takes a whole lot for the sellers to turn down or to change that direction. You can see it happened again yesterday. Okay, from where you have the 50, plot another Fibonacci again. From where you have from where you have the, yes, from that place, from that swing. Take it from where you have 80%, the low of 80, the low of 80. No, remove that one. and then just use one so that we don't confuse. We can all. Yes. Yeah. The next ring where the rally started. Yes, from there. Yes, from there to where you have your shaded region. The shaded region you plotted. Put the low there.
Okay. Yeah.
No, high, good. So take the high up. Take the 0% up to that. Good. Now this is a very good, this is a very big swing. Now, if you look at the spike, the spike price down again. Did you see that the spike price down again? But in this case, it wasn't up to 50%. So what you do is to watch. What we do is to watch by our look at your left hand side again. Are there places that shows a coincidence or that price is coinciding with the previous like a pin bar pointing down or like an arrow pointing hand with the handle pointing down? Please enlarge that swing. Let's see very well
Do
between
I
where
go
you
to
have the
lower time
100.
frame or better zoom in?
Yes, just enlarge it. Just enlarge it. We'll be able to see.
All right.
Enlarge it, enlarge, continue. Good. Look at where that price down, that spike, that price that spiked now. Yes, there. Look at it by the left. Now go to the left. Just go to the left gently. No, not up. I'm not saying you should go
Okay,
up. Just
okay.
go left like that. You see that candle? That candle having a spike. That candle having a spike is showing that there's a zone. That zone was the zone that rejected that spike. Now, on a lower time frame, on 15 minutes, you can easily see a 15-minute candle with a very nice bounce where you can pick that trade. Or you can even go to a lower time frame to check the smaller swing. Yes, you can see. That spike is where it's what terminated that swing. So because we have a strong fundamental pushing price, we can take our trade from there and put your stop loss maybe some 50 pips or 40 pips below that zone. Again, like I said, when there's strong fundamental, the fuel is always very strong. Price will always gather momentum to break that high that triggered the spike down. Now immediately that high is broken. There's something I do for you to be able to know where that rally, that swing, the new swing will end. There's something we do. What I do basically, because in the case of gold has not touched all of these zones before. So it's always difficult for you to use technical to know where it's going to terminate. So what we do basically is you move your Fibonacci. Once you have that spike down and the spike terminates, you interchange your Fibonacci. Please, Sito, can you move the 0% down to where you have the low, the two lows, and then move the 100% to where you have that high? Like interchange the direction.
Okay.
So for us to have an idea of where that rally, that swing is going to terminate upward.
So I go from here.
That's the low where you have your shaded region. This shaded region.
Something like this.
Yeah, it's very good. Now, when you interchange it like this, you will now add, please pay attention, you will now add 127.0, 150, and 161.8. Let me repeat it again. You add it to your Fibonacci. 127.0, 150, and 161.8. These numbers are Fibonacci numbers. These numbers occur naturally on nature. They occur as nature in plants, in animals, in things that are made by God. They occur. Now, because a lot of people are watching this psychologically, we tend to also believe that these numbers are also occur here because people's psyche, what we are seeing as candles is a sum total of people's psychology. Now, because a lot of people identify these numbers as strong Fibonacci numbers, we can use these numbers as numbers where price can have a turn. Do we understand? So immediately we plot it, you put 127, put 150, put 161.8, you only put 127. Now, if you look at it very well, one price hit 127 level. Did you see? Price hit 127 level. So I always take my profit at 127 level. Please take note. This scenario, we only apply this when price has not hit this kind of condition before. It has not hit these highs before. This is the first time price is creating new highs. You want to have ideas of where we may likely have price terminating or where you're going to experience some weaknesses on the rally. So we interchange our Fibonacci and use 127 as our likely zone to take our profit. If price move past 127, the next zone is 150. If price move past 150, the next zone is 161.8. Between 161.8 and 127, price will definitely create a reversal or a retracement, so to say. Do we understand? So these numbers are very, very important. You can see that at close to 150 price, there was a spike down again. Please move your Fibonacci to that new spike. The latest year. Yes. No, interchange it again. Interchange the Fibonacci again. Yes, take it from that high. No. I'm not saying you should plot it normally. Let's look at where that spike ended again. Take it from the second low. No. Plot it from down to up, low to up.
Okay.
The new swing. Yes, from there. The new swing. Good. To that high. Good. Very good. What did you notice again? Look at the 50% level. Look at that 50% level. Price got close to that 50% level. Now, by the left again, there is a consolidation by the left. Yes, that place. There are 3, 4 consolidation. You want to have 3, 4, 5 candles almost in the same zone together by the left, where you have candles start. Yeah, exactly that point. That point tells you that is where price is going to fight with it. It might be difficult for price to break that low. So immediately we have that spike again. You are watching. You are waiting for them. The spike price again. But before price get to that, where you have that consolidation, you would have seen it. You would have mapped it on your chart and begin to wait for the spike to get there. Once the price hits that zone, you can take your trade from there. That's why most times when price hits those consolidation zones, the buying pressure is always very, very strong and price bounce powerfully. My trade, I don't wait for 15 minutes candle to close. When I'm watching for this, once I pinpoint those zones, I just place my pending order on my trade and go away. Put my stop loss again at 78.6. If I'm taking my trade at 50, my stop loss is always at 78.6. If I'm taking my trade at 61.8, my stop loss is always some pips below 78.6. I give that gap. So, and I go away. So most times, if I've seen a consolidation like this, it gives me some high level of probability that price is going to turn from there to resume that move. And that was what happened. You can see how price bounced from that zone with that candle powerfully and then did a little consolidation. And what happened? It finally came to break that high again for the third time, And then immediately it broke that high. If you interchange our Fibonacci again from where that spike ended and the top, we'll have 0%. If you interchange Fibonacci again, you will see that where price got to 127 level again as take profit. No, not to that point. Not to that point. You will plot it on where the spike ended. Yes. So you can see 127. Please, can you good? Can you see 127 level? Price will hit 127 level as your take profit target. So when you are buying, you'll be conversant with the 127, the 150 level. Once price hits the 127 level, know that there is a higher possibility that we could have a retracement again, or the institutional traders could spike price again down for them to get entry to resume the trend. I hope it's making sense. So this is how we trade when there's a strong fundamental in place. It is this same fundamental on the dollar, because dollar is the unit of the global currency. It is this same fundamental that is also applicable, or that is showing up on the currency pairs. Yes, Valentine could be right that we have a technical play out on the weekly candle, yes. However, the fundamentals override any technical you can see. The fundamental says you that this is what is currently playing out in the global economy. This is the fuel, this is the thing that is happening the now. So we pay attention to the fundamental and see how it play out. Do we get it now? So this is how we trade along the line. So while you are waiting for price to come into your fair value gap or your other block, you can use this scenario, these conditions that I just painted, in guiding you or confirming your fair value gap or your other block zones when we are taking trades. I hope you understand. Now, what we are having currently on gold is that gold has broken the 4,000 price level. The 4,000 price level is an institutional price level. And when an institutional price level is broken, the institutional traders are always heading for the next institutional zone, which is 5,000. So as it is now, all of the things we are really likely going to be seeing are going to be small corrections, and then new highs, small corrections, new high, small corrections, new high, until the fundamental that is pushing price changes, until fundamental changes. I hope this helps us. So this is one thing we need to learn. You need to read the market sentiment. You need to understand the mood. You need to understand what is driving price. We don't just trade technically. We need to understand what is driving price based on the political or the economic data that is happening around the globe. I'm going to be stopping here. Thank you. We can continue, Valentine. Citoban.
All right, Mr. Jerry, thank you. Thank you very much for your knowledge on how to trade gold. So because we had people trying to know how it's done on the group, I'm very sure that now you have gotten clarity on how to trade gold, or especially now in this fundamentals, when the fundamentals are taking parts or taking most of the part of the price movement over the technical. So all you just do is use your Fibonacci and look for trades when you plot from one swing to the other, like we're doing. When you plot from one swing to the other, you just want a pullback into the 50%, or at least close to that 50% region, and then that is where you can look to trade. And then when you reverse your Fibonacci from here to here, where you get the 127 or the 150, that's where you do what? That's where you take your profits. Okay, so it's up to you now to go into the market and spot this for yourselves. I know a lot of people who want to get the settings. Let me just put it as a screenshot. Let me just put it as a screenshot. People that want to get the settings. So this is how you do it. These are the things that are put on my screen. You can go ahead and screenshot. All right. Yeah, you can go ahead and screenshot my screen. See the things that are ticked, right? You go and tick it, and then edit the numbers to fit in, so that you can use this on your own trading. Okay, I'm very sure we have done that. I'm very sure we have taken note and we have screenshotted. So this is what you just do. Just screenshot this page, and then go and set your Fibonacci to align. Okay. All right. That's that. Okay, thank you very much. So let me just do two more. Just add two more currencies there, and then we call it a day. Call it a day. All right. Let's do.
Citoban, please hold on.
Oh.
Please hold on the gold.
Oh, okay.
Yeah, can you remove this stuff? Symbol search.
Which one?
Now,
okay.
Hold on here. Look at the swing we have now. The current swing we have on gold now on the 4 hours.
Okay.
Can you see?
Yeah.
Can you note there are two things I can see on this swing? Number one, there's a small place where we have consolidation, which is candle consolidating at the top before the top here. The price broke recently. Can you put a line there? No, that one is one. That's the top. But yes, just put a line there. on that point so that people can understand this. No, bring the line down, bring it down. It's too high. It should be on, yes, on like exactly. So I don't use a line, I use a region, like the shaded region. Please put a shaded region. There's one candle that is spiking down. No, bring it down a bit. Bring that, yes, see that candle that is spiking down. Good. This is the first zone. So if they are going to spike price now, they've not spiked price for today. I don't think they've spiked price for today. So we are going to be watching at this
The
zone.
spark price already on smaller
The
time
spike
frame.
on okay. So
Yeah.
let's look at 1 hour. Go to 1 hour. But it is also possible that the spike price again and it will push down to this zone. So when you notice, okay, there's another one ahead. There's another one ahead.
Yes.
Yes. Look at it. Good, very good. So this was where I took my trade. So when the spike price down, you will want to watch the consolidated candles. Areas. These are places that they won't want to spike price below that zone because they know if they do that, it could also be costly to them because they also lose money. This is like a fight between institutions. Those that have the highest volume wins the race. So whoever starts the spiking down will also be careful. Do you understand? So once we see that spike coming down like we saw today, this zone we are seeing here will give us a very good place where we can take our trade, and then your stop loss will just be below it. Now, if price goes below this zone, if there's a news or if there's a spike or if there's a move below this zone, the next zone we are going to be watching out for is this one below it. Because the fundamental is so strong, the rally most times will continue. If it breaks the first zone, we continue from the second zone. So even if you've taken your trade in the first zone and you put your stop loss, your small stop loss below the zone, and you are taking out, don't worry, it's part of trading. Just wait patiently for this second zone. If you take your trade at this second zone, you could make 5 times or 6 times of the risk, or even 10 times of your risk, because you are going to be aiming to that high or 127 level, depending on where you are comfortable at taking your profit. You could take your profit where Citibank just dropped the line at the top. You could wait, you could follow it to 127 of this swing. The whole of that swing from where we have the bigger shaded portion to the top. When you interchange your Fibonacci again, you could take your profit at 127. So your reward to risk will be very high. So if you have lost, say 50 pips previously, and you come back to take the trade here, you could be making 300 pips in this move. Even if you want to take your profit on the 100% level from where this bigger shaded portion is, you will make good money. You would have recovered your loss, the first loss, and made some extra 3 times profit into it. So this is how you can learn to trade. Trading is, you can make it very simple. You don't need to plot a lot of things on your chart. Just understand what is driving price fundamentally, and then come back to your chart to pinpoint zones where you can take those trades. I hope it makes sense now.
Yes.
Okay, Citibank, you can continue. Let's continue.
All right, please, you can just give a round of applause to Mr. Jerry by typing, give him a clap emoji on the chat box. If you have gotten a lot of value from today's explanation, just give Mr. Jerry clap emojis, clap reactions, and okay, I can see it's coming in. Thank you very much, Oluti, and the rest of the people. Thank you. All right. So, you see, it was said today that it's better to know how to fish than to be given fish, right? It's better that we give you the way to fish than we just give you the fish. Because when you eat the fish finish, that's the end. Huh? All right. So, it's very important that we know how to do these things by ourselves. So, it's now our obligation as traders, right, to go back and watch for these things that occur on the chart. So now you know that when you have a spike, you look for the consolidated areas. When you get those areas, you do what? You can look to take a trade from there. All right. And then your target regions are, you can look at the next 127 region or the 150 region. Okay. I'm seeing all your emojis. Thank you very much, everyone. Do we even do we do any more
Hello,
today?
sir.
Like it's like
Hello,
what we have
sir.
done today has covered everything.
Hello, sir.
Who is speaking, please? I think that's Mr. Darlington, right?
Yes, sir.
All right.
I want to appeal that because we all enjoyed this little session from Mr. Jerry. I want to appeal that maybe we organize a special time again so that we can master this art. I really enjoy it. All of us have gotten impact from it.
Okay. Thank you very much. So, of course, these live sessions are those times where we come to learn it together and then do and then gain more value, right? So, like I said, we are still going to do trainings for people in the next week. So, just be positioned for the information that will drop, sir. Is that okay?
All right.
All right. Thank you very much, Mr. Dahl. Okay. So, Mr. Val, like we'll end here today. Like say we don't to.
Yeah.
Are you
We don't
there?
Now we are
benefit.
good to go. Yeah.
Oh, yeah.
We don't
So,
benefit.
Let's
so what?
let's look at Flip X1 because I've been
Okay,
training Flip X1 for the
okay,
past
okay,
2 weeks.
We have
So
3 minutes. Oh.
yeah, okay, 3 minutes. We don't have time again. Oh,
okay.
okay. I think maybe we'll look at it tomorrow. There's no time. There's no time. We'll have other things that we have laid out for the day.
All right.
We'll look at it
No
tomorrow.
problem, sir.
Thank you. Yeah. Have a
Okay.
nice day, everyone.
All right. Mr. Val, thank you. Can
Yeah.
Sir Jerry, thank you.
All right, everyone. Bye for this section.
Thank you, sir.